Hey there, Cryptonauts. My name is Graham Stone, filling in for Corbin Frasers this week to fuel your crypto curiosity with the latest from the Bitcoin and Cryptoverse. Today, we are diving into the global battle to hoard more Bitcoin. We've got predictions on the collapse of the fiat system, the latest CBDC panopticon experiment, and for giggles, a look at some virtual Zen vibes in the Metaverse. So grab your stimulative beverage of choice and let's jump right in. Firstly, who is hoarding all the Bitcoin? Well, it turns out it's a mix of big players, exchanges, corporations, and even governments. Coinbase leads the pack with over 1 million BTC held in custody, followed by Binance and Bitfinex. Basically, these platforms hold Bitcoin on behalf of their users, meaning they've got the keys to the kingdom, not you. So unless you want your crypto at risk if things go south, maybe consider a self-custodial wallet to keep your coins safe. On the subject of kingdoms, it looks like the kingdom of Bhutan is now a live player in the Bitcoin accumulation game. According to Arkham Intelligence, Bhutan's government is sitting on 828 million of BTC. Notably, Bhutan's holdings are not, like most nation states, the result of confiscations. Instead, the hydropower-rich Himalayan kingdom mined its Bitcoin, with mining operations ramping up dramatically starting in early 2023. On the subject of mining, let's take a look at some new data from analytics firm Cryptoquant.com. It looks like China, where mining has of course long been banned, has a slight edge in the Bitcoin mining game still, controlling 55% of the global hash rate. US miners aren't too far behind though, at 40% of the global total. So basically, it's a tug of war between China-focused Antpool and Foundry USA, with Antpool recently pulling ahead in power, beating Foundry USA by snagging 30% of the global hash power for just that one firm. Recently, we brought you some updates on Bitcoin's Layer 2 and Sidechain networks, and it looks like they have been pulling in some serious cash, locking down $1.31 billion in total value locked this year. Most of that is stashed in just two networks, Core and BitLayer, which hold over half of the TVL. Core has seen growth of more than 11,000% since February. Meanwhile, other networks like Rootstock, Merlin, Stacks, and BOB are chilling with smaller, but still impressive cuts. Bitcoin scaling is heating up, and these networks are doing everything they can to keep the demand for faster and cheaper transactions, while, of course, trying to grab the biggest slice of the Bitcoin pie. Moving on from pie to coffee. From our Latin American Insights series, which, by the way, you can sign up to receive free in your email, we've got a story about Compass Coffee, which is proving that Bitcoin is more than just a neo-gold store of value. The U.S. firm just bought a batch of Salvadoran coffee, using Bitcoin as the payment method. This, of course, enabled both the buyer and seller to save on cross-border transaction fees and settle the payment in minutes rather than the days it usually takes using TradFi rails. In other El Salvador and Bitcoin news, El Salvador's president, Nayib Bukele, is strutting his stuff, announcing that the Central American nation's budget will be self-financed, i.e. zero debt. Now, this radical concept where you, wait for it, don't spend money you don't have, is sure to ruffle some feathers amongst the debt financiers of the world, so be ready for some statements of censure from the IMF and other overlords in the fiat realm. Time to switch gears. Last week, we dropped Bitcoin.com CEO Corbin Frasers' latest opinion piece, which is bravely titled, "Fiat Currencies Will Be Irrelevant Within a Decade." Check it out at the link in the description of this video. Well, it turns out Corbin's not the only one ringing the alarm bell on the unsustainability of the fiat system. Lynette Zang, an economist who's been studying currency life cycles since 1987, says we're heading for a financial apocalypse, with the US dollar's purchasing power in a nosedive towards zero. She claims hyperinflation is already kicking in and predicts an economic meltdown by 2025. She says we're, quote, heading toward a feudal system, and warned that CBDCs, combined with declining faith in fiat currencies, could strip citizens of financial autonomy. Her advice? Stock up on gold and silver because your dollars might soon be as useful as monopoly money. In support of this line of thinking, but through the lens of a Bitcoin supporter, we have Bitwise CIO Matt Hogan, and he is all aboard the Bitcoin train, calling it, quote, the ultimate insurance policy against the US government, messing up the dollar and piling on debt. He's saying, it's like putting your money on the fastest horse in the race. Sorry, gold. Also, Bitwise is throwing some serious love at Ethereum, dubbing it the Microsoft of blockchains. Not the flashiest, but definitely the biggest on the block. Matt Hogan thinks Ethereum can bounce back from its current price and sentiment slump, noting that Ethereum has more active developers than the competition. So while folks are hyping up other new tech chains, he warns that right now it's cool to hate on Ethereum, but come November, the haters might be eating their words. Over to South Korea, where the central bank is inching towards deployment of its central bank digital currency. Starting in December, about 100,000 participants will be able to use digital tokens at supermarkets and convenience stores. Basically, the Bank of Korea wants to see if digital money can replace the current banking system. Now, we'll be following this story closely, focusing particularly on the panopticon elements of the project, i.e., the extent to which South Korea's CBDC increases or decreases economic freedom. So stay with us. Now, over to the US. We often talk about Orange Man making America great with Orange Coin, but this week, let's talk about his opponent, Kamala Harris. At a fancy fundraiser in New York City, the vice president mentioned crypto publicly for the first time in her presidential campaign. Actually, it was a single sentence, which was, quote, we will encourage innovative technologies like AI and digital assets while protecting our consumers and investors. Is this a sign that a Harris administration would be less hostile to crypto than the Biden admin has been? You decide. Okay, so for our final story this week, let's finish off with something fun. We've got Animoca Brands, the Sandbox, and Smobler dropping a virtual peace sanctuary in the Metaverse. The sanctuary aims to bring some chill vibes to the digital world. You can think of it like a virtual Zen garden, but with gamification. The goal? To promote global harmony and cultural understanding. And Animoca Brands executives said, quote, we believe that initiatives like this can drive meaningful engagement and contribute to positive change both in the real world and in the open metaverse. So, if you're in the Sandbox, you can now meditate on peace while avoiding any pixelated chaos. And that's a wrap on this week's dive into the cryptoverse. Want more? Hit that follow button and don't miss a beat. All right, thanks for hanging with us. Keep those keys safe. Stay curious, and remember, in crypto, every dip is just another moonshot waiting to happen. Catch you next time.